Hello, welcome to Smart Investing, everyone. So, today's video is going to be the banking services sector, also known as the banking sector. Today is November 3rd, Thursday. Markets are closed. It is 6:01 p.m. And for this video, it's going to be 5 stocks, and we're going to work our way from the bottom to the top. The first stock was actually NBTB. I was looking at it because it had an interesting chart, so we're going to look at that one first. First page, so we have here a $2 billion market cap company, 52-week high and low, the difference of about $14. So it's more than 10, and it's not too bad. PE ratio slightly below normal, so it is actually I wouldn't say very undervalued, but slightly undervalued. So it's not too bad with that. Dividends is at 1.2. And then the shares are actually close to, I'd say under 2 million that are bought and about 1.5 that are acquired. One second. Okay, so I'm gonna look at some technicals here. We're gonna look at the 5-year real quick. As you can see, they try to hit multiple highs. So as you can see here, the high here was around 36, then a low of about 29. It stayed in that range of the low up about 2021. Obviously in 2020 things have taken off. But then if you notice, even in 2020 before that, so I said the highest was 36. Then we had a high of about 37, you could say. 37 and change. So in April, we're going to actually go back to April, because that was the second time where that was the high. The next high that it made. So it made a high of about $40. And then if you see here, it dropped back down. The next high broke it only like by $1, which at least it broke it. And that was for March. Sorry, let me do it again. So every year it almost breaks a new high, which is a good thing. So this year it actually broke. The last high was about 41 for the beginning of the year. Actually, I had 3 new highs. So then in August, it hit a high of about 42. And then as you can see here, in this range, you can see here, right here, it broke above that. You see this little move right there. So we're going to look back in the last 3 months and see what it has done. So we can see here that I said around 42, and then it kind of dipped down here. So when this dipped down, it actually went back up not too long ago. So now we want to look at that month. So actually when it dipped down, it only had a short little dip and it went right back to even. Then we were just waiting for confirmation. And most likely, things have been going on a downtrend, but for some reason, it has gone on an uptrend, and pretty significantly. So this stock has, I'd say, taken off on an unpopular situation. I mean, the volume is not in the millions, so it's not like it's liquid, but not as liquid as one would think. So this is an unpopular stock as of right now, and it looks like people are interested in this stock. So we looked at the last 2 weeks. Now I want to see, hold on. So around, this is when it took off in earnings. So we want to look around October 26th. So around October 26th, that's when things were taking off. So basically around earnings. So other than that, I don't know why this stock is on an uptrend. I mean, did they acquire anything? Did they sell a major asset and they gained something else and invested in something else? I don't know. So for some reason, it's on a nice little uptrend here. It's dipping down. So again, I can't say what's a good price. I could only speak for myself. So now we want to look at the strategy here. So the ratings for the quants are quality, rated the highest at a 6.56. Lowest rating was a 4.25, which was income. Overall rating was a 3 out of a 5. So we look at that, and then it says Q4, and they beat earnings actually the last 4 times. So other than that, fundamentally, we want to see what they're doing right and what they're doing wrong. So the margins are okay for return on equity. Net margins is not showing me anything. Debt, pretty normal for a typical bank. So I don't see anything that's standing out. So net income has gone up 48% for 2021. I don't have any revenue results. And obviously the balance sheet, again, 89% debt. So they have 12 billion in assets, 10.76 in debt. Cash flow, they have to be cash flow positive in order for them to pay dividends and the likes and everything. So I would imagine they have strong cash flow. But aside from that, I don't know why this stock is on an uptrend. It just happens to be this stock is on an uptrend. That would be my only guess, at random. So it looks like they are, yeah, they're about They're about 500 million in cash flow. So that's pretty high compared to the market cap. Now, dividends real quick, we look at that. So they're raising dividends, and they've done so pretty much every year, not at a fast rate, but pretty normal. So for this stock, on a fundamental perspective, it's pretty normal. I'll say hold off on it. The value could have gone a little bit cheaper, but now that it's on an uptrend, I guess too little too late. So since it's on an uptrend, and it's not, it's not actually going down because it actually went up on the uptrend. So I guess I jumped into that stock too late to look at it. I mean, not to actually buy shares, but I mean to actually evaluate it. So even though it's a little too late to jump into it, I'll still hold off, and hopefully it drops a little bit, and then maybe it can go on a stronger uptrend. So for this stock, I'm not going to say yes or no. I'm just going to leave it blank. I'm just going to leave it blank with a question mark. So it's not a yes or no answer, but again, my rating for this would be to hold off on it. Don't buy or don't sell. So moving on to the next one is BANR, Banner Corporation, at $71.11. Volume, pretty typical. Earnings is at 5.53. Dividends at 1.57. I like the spread on the 52-week high and low. Market cap is at 2.43. So similar numbers to the last stock that we just reviewed. And it looks like it's a similar chart as well. We want to look at the 5 years. So it looks like it broke new highs, back in 2021. And then in 2022, it's broke new highs and then dropped down again. It tried to reach the new high back in August. And it barely made the new high. But it definitely broke it in October. And then now, obviously, we're in a downtrend. So there might be some sell-off here. And so it looks like the money's going into the banks, the banking sector. That would be my only guess, because I don't see strong volume. I would have to see a change in this drastically. And then also, aside from earnings, I want to see more of a reason why this stock is going up. Because apparently the last stock that we just did, that one was going up too. Similar chart, similar numbers, similar spread on a 52-week high and low. Very, very similar numbers. And then they also pay dividends. Balance sheet, I'll be surprised if it's a similar balance sheet. And it looks like it is for the quant rating so far. Rated 3 out of 5. Highest rating was quality. So they beat their earnings the last 4 times, just like the last stock. We want to see turn on equity. So their margins are a little bit lower. No, actually they're about the same. Sorry, because I was looking at quarterly. Margins more or less about the same. And then their net margins, it's not showing me anything. So similar numbers. Literally, it looks like the same company that we just did. So, yeah, it looks almost very identical. And so operating cash flow is at 301. So investing is at negative. So they're down 700 million. So the financing has to be above 700 million. So obviously they cover it with that. So yeah, they're close to, I'd say, over 800 million in cash flow and less than a billion in cash flow, between that range. So for this stock, again, I would say hold off on it, even though, they're paying rising dividends. They have a raise in 2020 going into 2022. Sorry, 2021 going into 2022. But for 2020 going into 2021, it remained the same. Pretty much remained the same at 41 cents. And in 2020, they did pay a special dividend. But they're not a frequent payer. They do it every few years, I guess. So ever since the start of 2018, they are a infrequent dividend payer. So last split was in 2011, 1 for 7. That was it. So for this stock, I'll say hold off on it. Give it a blank. So I'd say just hold. So it's not a yes or a no. It's just not appealing as of right now. Next stock up is IBN. So IBN, high volume, $77 billion market cap. Slightly overvalued on a PE scale. And then dividend yield is horrible, but the dividend payment is at 12 cents. I would understand why. And then 52-week high and low, it's not that good, but they are a $77 billion market cap company. That's pretty insane. So when I look at the 5-year, I would say they're on an uptrend. This stock seems okay. And the reason I say that, they don't earn a lot at all. Very, very slow growth. And then $77 billion bank. So with the chart, you have pretty much new highs in 2021, new high, new high, new high, new high. It went down and it stayed flat, and it held up on its own in 2022. But guess what? In July, the start of July, started going on a new uptrend, and then even till now, it's still pretty much holding up its new highs. So even without looking at the price, it still looks like a strong position to be in an uptrend. For some reason, I think money's going into banks. That's what's happening. That's what I'm seeing. Because again, this is the third bank already that I'm reviewing that it's on a strong uptrend. So, it's not really popular because the last two years, I've evaluated stocks and stuff, and then I'm going in order, alphabetical order by sectors. And then the past year, I've been going over the banks, and for some reason, I haven't seen numbers like this and uptrends like this. So it's pretty crazy to realize this. So this stock is actually pretty active with, a 7 million volume. That's extremely active. So in a 1 year, again, you look at the chart, went down, but it bounced back up. Now we're going to look at the analysis for the quants. So for the quants, we have momentum, definitely high. I definitely agree with that. Income, I agree with that. It's really, really low. So this is not a dividend stock. This is better to day trade. So earnings they have beat, and the numbers for fundamentals, I don't think I should even look at them really, just because I'm not getting any. So these numbers are inaccurate from 2020. So yeah, it makes no sense to look at the fundamentals because these numbers aren't accurate. I don't know how they're coming up with trillions of dollars here. Yeah, these numbers are all funky. So for some reason, I don't know if even the technicals are wrong. So again, they did pay a dividend only one time per year. That's actually pretty awful, especially for a bank. I think I know why people like it so much, because they don't pay much, but then also they're pretty experienced, I guess, in splits. So definitely a popularity contest for this bank stock for day trading. So again, I'm definitely going to say no, because it's not good for the long term. It's only good for the short term. I like to look at it both sides and every which way if it's good for any strategy. And, it's only good for day trading. And I don't think a lot of people would appreciate that. I mean, I do day trading every once in a while too, but I don't think this is meant for the majority, for most people, for a long-term hold. So I'm going to say no to that one. Next stock up is CPF. So CPF, downtrend for the year. 5-year remained flat. Now it's just going down. You can obviously see from that chart, it's showing me very undervalued. The dividend is $1. Yield is at 5.4. The spread between the 52-week high and low is at least $10, but the chart doesn't support it. Somewhat active. In the market cap is 524 million. That's a pretty low market cap. And we're going to look at the quant ratings. So it's saying it's a quality company. They have beaten their earnings the last 4 times, just barely in Q3. So those margins are pretty low, but for equity is okay. It's pretty good for equity. Earnings, they have had their best earnings in 2021. That is at 92, slightly higher than most. competitors, net income, it's not giving me revenue. Net income is at 79, close to 80 million. So it's up from past 5 years. Balance sheet is again 7 billion in assets, 6.86 billion. And this is for 2021. So let's see the cash flow, which is going to be the most important thing. So we have here 550. They got to be above 550. So we're looking at least 200, at least 200 million in cash flow. Or they might have some cash reserved as well. So the cash flow positive. At $19.26, they can afford the dividend. We'll look at that real quick. Rising dividends, but doesn't look like it's much. So for this stock, it looks like it's on a downtrend and everything. So I'm gonna say no. Doesn't seem like people are interested in it. So last stock that we have is HBNC. So, they just hit a major downtrend here. November, that was a sell-off. Even though they gained 2% today. $15.24. 52-week high and low, a difference of not close to $10. Market cap is at 664 million. Saying it's undervalued. So they can't afford the dividend. Dividend payout is at 64 cents per year. And it's reaching pretty much its flat numbers prior to 2020. So look at that downtrend. Look at that big drop for the earnings report. It's pretty awful. And so we're going to look at the analysis. Another one that says quality. It's rated 4 out of 5. And then for the income is 6.18. Lowest rating was momentum. So it's saying it's pretty decent for everything overall. But I think it's too risky. Obviously, because it's cheaper and the market cap is there. It looks like they can cover the dividend. They are pretty active in terms of day trading and all. But we'll look at the dividends real quick. Any splits? So they're very popular for splits. Look at all these splits. So we have here in 2003, 2011, 12, 16, 18. So these shares have been diluted. I don't know why they consider it quality if it's going to get diluted. Meaning, yeah, you own more shares for a cheaper price, but your percentage of ownership goes down. So you have the ability, to own more shares, but again, it's like, you're gaining less in percentage, and overall. So anyhow, too many splits for this company. I'm not fond of it. So I'm going to say no for this stock, even though the volume seems okay. And again, that chart confirmed it. So you see that big drop here in earnings. Again, I'm not looking at the numbers here. I'm just looking at the chart, just strictly the chart. And you see this big uptrend, but then look at this big drop. I mean, because with this uptrend, it took time for it to get here, so it's not like straight up, you know. It's more at an angle, you know. But then you look at this one. This one's like a straight drop. That one's like straight down, like a solid line going down. So that's just an obvious downtrend. And then we can confirm it here with all that volume there. So I don't see this stock going up. It's pretty risky. So that's why I say no to this one. So that's pretty much it. That's all I have for you guys. Thank you guys for watching, and I'll see you guys in the next one.